Radio. We're here at the Palisade Jekyll Island Conference and with another speaker. It's my good friend Dave Zook, the CEO of Real Asset Investor. Dave, thank you for coming out and talking to our audience today.
Thanks for having me, Colin. It's been great. I mean, the quality of people in the room is staggering. You know, it almost reminds me back in the day when they had what would be today's billionaires here at Jekyll Island. There's a bunch of billionaires and billionaire representatives here in the room today, so it's a little bit similar.
It's pretty crazy. I mean, we do have a couple billionaires in the room, so it's a very informed and interested group of people, mainly focused on resources. You are a resource investor. In fact, you're in several deals together that we're in at a very large amount, but the main thing that you're working on is actually real estate, cash flow, ATM investing. You're the largest investor in several projects, own thousands of units in the U.S. So I just want to introduce you to our audience and talk about some of the ideas that you talked about today.
Yeah, so my talk today in the conference was based on dependable cash flow, dependable monthly income. I knew that a bunch of guys in the room were heavy on the speculative side, which, look, I got to use discipline on my end to keep my focus more on the cash flow side, because at heart I'm a speculator. I mean, who doesn't enjoy riding a stock from 25 cents to 10 bucks? I mean, everybody loves that story. So sometimes the steady income of a cash flow property can get a little bit boring, but I think I think everybody needs some of that in their portfolio for stabilization.
Agreed. Well, you used a very good example of actually commodity-focused speculating. You have a business in Pennsylvania, a family business. I believe you have like 75 employees, and you guys are in the business of building sheds and other construction. And you use a lot of plywood, I guess. And you were talking about how plywood went from $5 to $6 to $7 a few years ago, and you saw the trend, and you started buying as much plywood as you could. And sure enough, the price of plywood peaked at $14, $15, and you guys were able to operate at a much higher profit margin, and that's what got you into looking at the resource market.
You know, that sparked an area in my life that has never went away. You know, being able to see that slide going from 11, 10, 8, 7, 6, $5, and realizing that the cost to produce that commodity was higher than what it was selling for, and then being able to just jump in and jump all in and load up. You know, it was an experience for me at the time. I'd been studying Jim Rogers' work, and it's kind of what sparked my interest in commodity investing, and it kind of just never went away. It's one of the things where when you do have that 5-bag or 10-bag or 20-bag, you never forget it, and you're hooked.
Yeah, that's true. In terms of what you talked about today, one of the main things was tax strategy. Some people may be familiar with, as a U.S. person, that a loophole, if you will, or something that's available to people is buying real estate and using the depreciation against your taxes. Something you can discuss here. Yeah,
so I always tell people that if you're paying a big tax bill, if you're getting taxed, that's a fine. You're being penalized for not doing what the government wants you to do. The government specifically wants you to, or the government specifically rewards you to go out and take the risk of drilling an oil well. They're not very HUD programs. If you're at all familiar with government programs, we all know that they're usually not profitable and they're run really poorly. So they, as an incentive to entrepreneurs and investors, they're telling me, look, if you go out and invest in a multifamily building, we'll give you a tax break. So it's really all it is to figure out what the government wants and then adjust your strategy accordingly. So I used to tell people, look, if you're getting a big tax bill at the end of the year, it's the government's fine. The government's punishing you for not doing what they want you to do.
Well, that's an interesting way to put it, but yeah, you're a very tax efficient person living inside the United States. So the last thing I want to talk to you about is the people watching and the audience that watched your talk today are of the opinion that there is an asset bubble across almost every asset class right now. Real estate is in many ways as lofty as it was pre-2008, which of course crashed the global economy. you showed a whole bunch of examples of being at the right place, the right time, having the right team, and having cash at hand. One example, in 7 months, you've bought something for $6 million and you have an LOI to sell it for $10 million. So are there opportunities right now? Is real estate smart to look at?
There are definitely opportunities. I think the better and the deeper your team is, the better your chances of success in the real estate space. That's why I'm not running around to a bunch of different cities and looking to just acquire real estate. I think we're in the wrong time in that sort of bell curve. I mean, I think we're high on the cycle for buying real estate, but there are opportunities. I mean, I explained, the real opportunities is we're at the right place at the right time with cash. And the other thing is, during the last bubble and the last crash, look at the guys that got hurt. There were the guys that were buying for $6 million in the hopes that they could sell for $10 million. It's not what we do. Our goal is to buy a piece of property, leverage the tax benefits on that property, and we invest for cash flow. So the fact that we got the LOI for $10 million, we weren't actively out there trying to sell that property, but we got somebody came to us and said, hey, we want to buy this property. And look, if we get in somebody's way and they're offering us a premium on that property, we'll sell. We're not married to the property, but that's really not why we're investing in that real estate in the first place. We're investing for the tax benefit and for the cash flow. So let's say there's a 50% correction in the value of that real estate. I mean, if our plan is to hold 7 years or 10 years and it goes through that whole correction period and we're collecting the cash flow every month and it comes out of that. I mean, I've got specific properties that are like that I bought in 2003, went through that 2007, 2008, 2009, now it's back up again to 2017. To me, it didn't matter because I was investing for cash flow. Every month I was getting that cash flow from my tenants. So I think it's a big difference between investing in real estate as a speculator, trying to sell to the next fool, or investing for cash flow.
Absolutely. Well, Dave, if any of our audience members have questions or want to get in touch with you, what's your email or the best way to do that?
The best way would be to reach out to me at info@therealassetinvestor.com. That's info@therealassetinvestor.com. And my team or I, we respond to every email that comes in. So I'd be happy to talk to your audience.
Dave, really appreciate you coming down here. Always good seeing you. Can't wait to do it again.
It's been fun so far, and I'm sure it's going to be great the next day or two.
Absolutely.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?